My name is Farhan. In today's video, you're going to solve question number 8 from 2020 past exam. This question requires you to reconstruct the ledger accounts for accounts payable and GST clearing. You're also required to prepare the operating activities section for the cash flow statement and then the income statement. We're also going to have a discussion question for comparison between net profit and net cash flow from operating activities. As you can see, this question has a lot going on and is 22 marks in total. I see a very similar question coming up in the next 2024 exam, so make sure to focus and follow through the entire content for an excellent understanding. So let's get started. So Rightfield Sports reports monthly and uses 100% markup on inventory. So here you can see we are given the balance sheet as of 31 August 2020. As you can see, all the assets are given on the left-hand side and all the liabilities and owner's equity are given on the right-hand side. We are given some additional information for the month of September 2020, and we are required to reconstruct the ledger accounts for accounts payable and GST. So we have already been provided with the outline for the ledger account. So what we are going to do first is start with the additional information, and we are going to walk through each and every single additional information that we're given. But before we proceed further, let's look into something else. You can see the balance sheet is given as of 31 August 2020. So all these values here are the closing balance for the previous financial period ending 31 August 2020, since the business reports on a monthly basis, which means all of these values for assets, liabilities, and owner's equity will become the opening balance on 1st of September 2020. And all these transactions are relevant to the month of September 2020. And the ledger accounts that we are going to be constructing are for the month of September 2020. Okay, so the first line says that sales are all on a cash basis, and that was $56,000 plus GST. So on the right-hand side of the screen, you can get to see the workings. So sales is given as $56,000 to us, and we know the GST is 10% on sales, and all sales are on a cash basis, which means the GST we are going to receive on all of these cash sales is $5,600, which is what we have calculated by simply multiplying the GST rate of 10% on the total sales volume of $56,000. And that gave us $5,600 as the GST on sales. Then you can see that I have calculated the cost of goods sold, and I simply divided the sales of 56,000 by 2, and that gave me $28,000 as the cost of goods sold. So this cost of goods sold was done on the basis of the first line of the question, which explicitly mentions that the business uses 100% markup on inventory. 100% markup on inventory simply refers to the fact that sales is double the amount for the cost of goods sold. So if sales are given to us as $56,000, then cost of goods sold should be divided by 2, which is $28,000. Okay. Now, both the sales and the cost of goods sold are what we will be including within the income statement. That is a requirement for Part C. Okay, so the second additional information says purchases all on credit were $30,000 plus GST, and the credit terms are 4/14 N/30, and the discount is always taken. The accounts payable has a closing balance at 30 September of $80,700. Okay, so let's understand a few things first. So purchases, including GST. So whatever amount for purchases are given here, that was excluding GST, and that is 30,000. So including GST, the purchases will be 30,000 plus an additional 10% multiplied on 30,000, which gives us $33,000. Okay. So what we'll do first is go through each and every additional information. And once we have sorted all the workings, then we're going to start with the reconstruction of the ledger accounts and everything else, because they will be pretty easy afterwards. So this is what we have so far for additional information too. So purchases are normally a part of the cost of goods sold, but since all the purchases are on credit, are all on credit, this is what we will be including within the accounts payable eventually. Okay. So additional information number 3 says rent is paid 2 months in advance and was last paid on 1st August. Okay. So whatever rent was prepaid on 1st August 2020, we understand the question says it covers 2 months. So which means the rent that we have prepaid on 1st August 2020 covers the entire month of August 2020 and the entire month of September 2020. We are mainly preparing the financial statements for the month of September 2020. All right. So rent that was prepaid on 1st August 2020 covers 2 months, August and September. So the value of the prepaid rent should be $7,000 on August 1, and the rent expense for September should be $3,500. Now, my question to you is, how did I figure that out? If you check the balance sheet, you are not given $7,000 as the prepaid rent, but $3,500. Okay. Now, here is something what we need to understand, and I need you to understand this properly. So the prepaid rent that remained in the balance sheet as of 31 August 2020 was $3,500, which refers to the economic benefit that the business was yet to consume at 31 August 2020. Right. So the prepaid rent of $3,500 is a current asset, referring to an economic benefit that the business still didn't consume at 31 August 2020. And this economic benefit, the prepaid rent of $3,500 that remained at 31 August 2020, would have been entirely consumed in the month of September 2020. How can we say that with conviction? The question, the additional information clearly mentions that rent is paid 2 months in advance and was paid on 1st of August. So obviously, whatever was left in the books for prepaid rent at the end of the first month, which is 31 August 2020, will be entirely expensed during the month of September 2020, and that should be $3,500. All right. So rent expense for the month of September is $3,500, which is what we are going to be showing in the income statement. Okay. Now, how do we know prepaid rent is $7,000? Think about it. We paid rent in advance for 2 months, covering August and September. At the end of August, we had $3,500 remaining in prepaid rent, which was consumed in the month of September. All right. So what does that tell you? So that means each month, the rent that we pay is $3,500. So on 1st of August, we would have paid for 2 months, which is August and September combined, $3,500 plus $3,500, which would have been $7,000. So this is what we would be including, not including anywhere, but it's just a test of your understanding of the question of how everything comes together. All right, so let's move on to additional information number 4. Depreciation of motor vehicles is 30% per annum using the reducing balance method. All right. So because we are using the reducing balance method, we want to first find the carrying amount or the net book value. Okay. So the carrying amount or the net book value is simply calculated by subtracting the accumulated depreciation, which is also known as the total depreciation, from the cost. So the cost of the motor vehicles is what you can see here, and that was $86,000 at the end of the previous month, and the accumulated depreciation was $26,000. Given that during the month of September 2020, we haven't purchased any motor vehicles, nor we have sold any motor vehicles, there's nothing really to do in terms of other adjustments. So we simply find the carrying amount or the net book value by subtracting the accumulated depreciation from the cost, and that is $86,000 minus $26,000, and that gives us $60,000. Now, because we're using the reducing balance method, we always apply the given percentage, which is 30 in this case, on the carrying amount itself. So 30% multiplied on the carrying amount of 60,000 gives us $18,000 per annum as the depreciation for the existing motor vehicles. But we are only concerned about the month of September, so 1 month. So if for the entire year, which is 12 months, we have a depreciation expense of $18,000, then for 1 month, it is 18,000 divided by 12, which is $1,500 as the depreciation for motor vehicles. And this $1,500 is what we are going to be showing in the income statement as depreciation expense for motor vehicles. Okay, now before we move further into the next additional information, I want to ask you the meaning of carrying amount. So what do you understand by carrying amount or net book value? So that refers to the remaining economic benefit within the non-current asset that we could still consume for the purpose of generating revenue. Again, carrying amount or net book value at any given point in time refers to the economic benefit that exists within the non-current asset that we are yet to consume and help us generate more revenue. That is the whole purpose of having non-current assets in the first place, to begin with, like in the business, within the business. We have non-current assets to help us generate more revenue. Okay, and as we generate this revenue, these non-current assets get utilized, and that's how they get expensed over time. All right, so let's move on to additional information number 5. The loan and all interest outstanding were repaid on 15 September. Interest is 6% per annum. All right. So loan and all interest outstanding were repaid. So I want to highlight that. So both the loan and all interest outstanding were repaid on 15 September. Now, if you check the balance sheet at the end of the previous month, which is at 31 August 2020, you can see that under the liabilities section, we got loan of $12,000. And that is what the question explicitly mentions, that we have paid this off entirely, halfway through the month of September. So the amount of loan that we have repaid is the entire loan of $12,000. And this impact is going to be felt in the balance sheet and also within the financing activities section of the cash flow statement, which is obviously not what we're doing in this question, but just for your understanding, loan repaid of $12,000, if you were preparing the financing activities section of the cash flow statement, you would be showing this as a cash outflow, which is a negative number within brackets. And in the balance sheet, at 31 September 2020, you wouldn't be having any loan of $12,000. It would be zero because you have repaid it off entirely. All right. Now, what about the interest? So the interest, we know, on an annual basis is 6% per annum. So the interest on an annual basis that we would be paying is 6% applied on the principal of $12,000, and that would be $720. However, we know that the business reports on a monthly basis. So having said that, the monthly interest rate comes out to be $720 divided by 12, which is $60. All right. So I believe you understood everything so far. Then from the 1st of September until the 15th of September, that is when we have repaid off the loan and all the remaining interest that was outstanding on the loan. So 15 days. So the loan was used for 15 days only within the business in the month of September. So if the monthly interest is $60, so the 15-day interest would simply be divided by 2 again, and that is $30. All right. So the 15-day interest will be $30. So this $30 is the interest expense that we are going to include within the income statement for the month of September 2020. Right, so let's move on to additional information number 6. Wages expense was $7,500 with $400 owing at 30 September. All right, so the income statement is going to show the expenses that we have incurred for the financial period September 2020, and that is the entire wages expense of $7,500. In the balance sheet, we would be showing accrued wages of $400 because this is wages that we are obligated to pay. This is a present obligation of the business at 30 September 2020. But what about the cash flow statement? The amount that we actually paid for in wages, which is an operating activity. The reason this is an operating activity is because the wages go to employees who are strictly part of the operations of the business. So the wages that we have actually paid is 7,100 because the total we have expensed for the period was 7,500 and 400 was still yet to be paid at the end of September, which means we have only paid $7,100, and this is a cash outflow which needs to go within the operating activities section for the cash flow statement. So here you can see the three different financial statements are going to have three different numbers. Income statement includes the entire wages expense of 7,500. Balance sheet includes the accrued wages within the current liabilities section of 400, and cash flow statement, which only includes the wages we have actually paid in cash, and that is 7,100 recorded as a negative number, which refers to an outflow. So let's move on to additional information number 7. $8,000 plus GST was paid for advertising and only 40% was used in September. All right. So $8,000 was paid for advertising, and out of that 8,000, only 40% was used in September. All right. First of all, I want to calculate the advertising, including GST. Make sure to show all workings in the exam. You don't want to leave any workings behind. So advertising, including GST, is going to be 8,000 plus an additional 10% applied on 8,000, which gives me $8,800 as the total, out of which 800 is the GST component. Right. Now, the reason we also want to separate this GST component is because we have been asked to reconstruct the ledger accounts for GST clearing. So that is why it's easier to keep all the numbers separate based on how we're going to use them eventually. All right, so we understand out of the $8,000 we are paid for advertising in the month of September, 40% has actually been expensed. So what is the actual advertising expense for the month of September? So that is 40% of $8,000, which is $3,200, right? Okay, so in the income statement, we are going to show advertising expense of $3,200. If we were asked to prepare a balance sheet, we would be showing 4,800 as prepaid advertising at end of September 2020. And in the cash flow statement, how much do you reckon we're going to show as the cash outflow within the operating activities section? We have paid 8,000, including GST, that would be 8,800. So we're going to show the entire 8,800 in the cash flow statement for the operating activities section. Okay, so I believe you understood what's happening here. 40% has been expensed, which is $3,200 going into the income statement, which leaves us with 4,800 as the prepaid advertising that needs to go into the balance sheet. But in the cash flow statement operating activities section, the entire 8,800, which reflects the amount that we have prepaid plus the additional GST. Okay? Right, so the last additional information says that no GST settlements with the ATO happened in September. Okay, nothing to worry about that now. So let's start with the reconstruction of accounts payable first. Now, you can see the opening balance was given to us on 1st of September 2020, and that is $13,200. Okay. Accounts payable is a liability account, and all liabilities by default must have an opening balance on the credit side. When liabilities increase, we credit them, and they must have a closing balance on the debit side. So let's just assume that we are not given the opening balance here. Where do you think we can pick this information from? You can simply go to the balance sheet at the end of the previous period, and you would see accounts payable given us $13,200 as the closing balance at 31 August 2020, which automatically becomes the opening balance at 1st September 2020. Okay, so $13,200 is given to us. Now, let's figure out some other stuff. Now, what's next? So you see here, I've included for the period ending 30 September 2020, I'm including inventory slash GST of 33,000. Right, make sure to write inventory slash GST clearing properly. I just didn't have enough space, so I didn't do it. Now, where did I get this $33,000 from? So if you recall the second additional information, it clearly mentioned that purchases including GST is how much? Is $30,000. All right, and that was all on credit. The question explicitly mentioned that all the purchases were on credit. So including GST, it comes out to be $33,000. So within the accounts payable ledger account, on the credit side, we're including inventory plus GST clearing of $33,000 because the accounts payable, we have to pay them including GST, obviously. And this $33,000 refers to additional purchases made on credit during the month. All right. Now, what about the payment? So let's figure that out. So do you think we can find the closing balance, as you can see here, on 30 September 2020 of 80,700? Or is it given to us in the question? If you read the question carefully, you will see that they've explicitly mentioned that the closing balance at 30 September was 80,700 credit. So that is what we're doing here. Okay. Now what do we do? So I need you to focus and understand what's happening. So before anything else, we understand that now we have to balance the accounts payable ledger account. So first of all, we take a quick glance and we can see that the credit side is obviously the heaviest side. So we add everything on the credit side. So add the opening balance with the additional purchases, including GST, which is simply add 13,200 with 33,000. And that gives us 46,200, which must be the total for everything on the debit side if the fundamental rules of accounting were to apply, which obviously should apply. And when you subtract the closing balance of 80,000 from 46,200, the deficit that needs to come on the debit side to come and fill the void is $27,500. Okay? All right, so hold that thought. So $27,500 is what we need to include on the debit side to make sure the thing balances. All right. So what can we call this 27,500? All right. So if you read the question again, it says, sorry, so credit terms are 4/14, N/30, and the discount is always taken, which means 4/14 here refers to the fact that whatever purchases we make on credit from our suppliers, we have 14 days to pay them. And if we pay them in 14 days, we get a 4% discount. If we do not pay them within 14 days, we are allowed to pay over 30 days, but after the 14th day, we do not qualify for receiving a discount. Okay. And the question also mentions that the discount is always taken. Okay. So this deficit of 27,500 on the debit side, 4% of it is what we are receiving as discount. So 4% of 27,500 is what we are receiving as discount, which is known as the discount revenue. All right. This is like an income, other income for the business, because we have saved this much. That is $1,100. So what I'm going to do here is I'm going to write discount revenue, and that's going to be $1,100. I've just written discount rev. You need to write revenue, REVENUE, for the full marks. So the discount revenue is $1,100, which means if we are getting 4% as discount, then the 96% is what we will actually be paying our accounts payable, and that is 26,400. So this 26,400 refers to the payment that we need to make, and the payment is going to go from the bank account. That is why we're writing bank 26,400. Why are we including the discount revenue and the payment we have made to the accounts payable on the debit side? This is because this results in a reduction of liability, and if liabilities go down, we debit them. And the reason they went down is because we got a discount of 1,100, and also the fact that we paid 26,400. So make sure to also bring the opening balance forward the next financial period, as we have done here on 1st of October. And if you do not do that, you will not get full marks. So make sure to do that as well. All right, so what about GST clearing? So GST clearing, the opening balance is given as 16,500. And if this wasn't given, just check the balance sheet for the previous period, which you can confirm, 16,500. Okay. Now, what items involves GST? Starting from the very first additional information, we received GST on sales, and that is 5,600. Now, GST clearing is a liability account. It refers to the obligation that we as a business have to the ATO. So whatever GST we are receiving on sales, it's our obligation to pay to the ATO all that money that we're going to collect during sales. Whatever we are paying for purchases, whatever GST we are paying for purchases, as long as we keep our invoice, we are able to claim all this GST as an offset against those which we have collected. And we make a net settlement at the end. Right, so GST on sales is increasing our obligation. That is why we're including that on the credit side to reflect the fact that liabilities have increased because of the credit sales, and that is 5,600. The reason I wrote bank is because you're making all the sales for cash. So whatever GST you received obviously had come to the bank account. All right. Now, what about everything on the debit side? So starting with the first one, bank 800. So that refers to the advertising GST that we have paid. Remember, I told you guys about the GST component to be kept separate because it makes everything easier. So that is what's going here. The reason we include it on the debit side is because we have paid this. We are able to offset this and use this as a reduction for our overall GST settlement. And then we have also paid $3,000 to our credit suppliers, as you can see, based on the working we have done for additional information too. And then the closing balance of 18,300 is what we had to figure out ourselves. So let me show you how we did that. So let's assume we didn't have that to begin with. So we would balance this T account, this ledger account, by finding the total of everything on the credit side, which is 22,100, must be the same on the debit side. And when you subtract the balance for bank and accounts payable, you're left with 80,300, which is what we call the closing balance. Make sure to bring this forward to next financial period on 1st of October as the opening balance if you want to get the full marks. All right. So I got another question for you. So which is, why are we not writing inventory within the debit side of the GST clearing account, but writing accounts payable instead? So this is because the purchases here were made on credit. So when we write accounts payable of 3,000, we're just simply referring to the fact that we still owe the GST on those amount and we haven't paid them yet. That is why we do not write inventory. If we had made cash purchases, you would have written inventory here instead of accounts payable, because the GST would already have been paid by them. Okay? All right, so that's all for the first requirement of constructing the two ledger accounts. Now let's move to the second part, which is to prepare the operating activities section of the cash flow statement for September 2020. All right, so here you can see I've already completed the cash flow statement, the operating activities section. let me walk you through each and every line. So we started with the cash sales of 56,000, and then we added the GST received on sales because this is also a cash inflow. So these are the only two cash inflows that we got. And then we showed how much we have paid our credit suppliers, and that is 26,400. Where did we get this amount from? This is from the reconstruction of the ledger accounts for accounts payable from the previous part, and that is 26,400. The reason this is in brackets here is because we have paid it refers to an outflow. Then we have paid wages of 7,100. So let me do a quick recall. So if you remember, the total wages expense was 7,500. Accrued was 400, which refers to the wages owing. And the actual wages that we have paid for in cash would therefore be 7,100, which is what we're including here. Interest paid is 210. Right, so a lot of students made mistakes in this case. You see how we know that the interest expense for the month of September is 30. You also need to include something else with the 30, and that is an additional 180. So where does this come from and why? So this 180, if you check the balance sheet for the previous period, you will see we had accrued interest of 180. And then the question mentions that all interests were repaid on 15 September. So the entire thing is a cash outflow. 180 from previous period plus 30 for the current 15 days in the month of September, which gives us $210 in total. And that is what we have included here within brackets to reflect a cash outflow. Then we have prepaid advertising of $8,000 and the GST we paid on advertising of $800, both in brackets referring to an outflow. So you just simply add and subtract what you have to, and then you end up with $19,090, which is what we refer to as the net cash flow from operating activities. Okay, so then part C requires us to prepare the income statement. Pretty straightforward. We take all sales, all other income, and then we subtract all expenses for the period. So we started with the sales of 56,000. Then we subtract the cost of goods sold of 28,000 because the markup is 100% on inventory, which means if sales is 56, cost of sales needs to be divided by 2, which is 28,000. So sales minus cost of goods sold gives us gross profit of $28,000. Then we add any other income or other revenue, which is the discount revenue of $1,100 we have calculated from the reconstruction of the accounts payable ledger account. And then when you add that to the gross profit, you get 29,100. From there, we subtract all the expenses, wages expense of 7,500, rent expense of 3,500, and then depreciation of 1,500 for vehicles, advertising of 3,200 based on 40% that was expensed, interest expense of $30 for the current period, not 210, which reflects the total cash outflow. So be careful. And once you add all the expenses, it's 15,730, which is what you subtract from 29,100, and you get 13,370 as the net profit for the month ended 30 September 2020. All right, so I'll just hold this frame for 10 seconds for you so you can quickly copy everything and understand what's happening. Okay, so when you're ready now, so let's move on to part D. So what's the question in part D? Part D says, in August 2020, the business's net cash flow from operating activities was $12,200, while net profit was $40,000. Okay. Explain, giving 2 examples, how the business's net profit can be higher than its net cash flow from operating activities. Okay. So let's understand a few things first. So how do we calculate the net profit? So we calculate the net profit by taking the revenues that we have actually earned during the period minus the expenses that we have actually incurred or consumed. And this is under the accrual basis assumption. Net profit equals to revenues earned less expenses incurred. Now, when it comes to the cash flow statement, we have cash inflows and cash outflows. And this doesn't necessarily have to relate to the current period. It could include results, it could include transactions from previous period, and it could also include transactions for future periods. So we only talk about cash inflows and cash outflows strictly when it comes to the cash flow statement. Now, the cash flow statement obviously does not follow the accrual basis. It's just the income statement and the net profit calculation. So when it comes to the net operating cash flow, it could include cash outflows such as prepaid rent. It could include other stuff like such as so prepaid rent. So let me give you an example. Sorry, before that. So the net operating cash flow, if we include prepaid rent, for example, in the month of August, we can see that the profit was higher compared to the net cash flow from operating activities. Now, when you are paying prepaid rent in the month of August, you would have paid $7,000, which would have covered us for the month of August and September, right? So that is why, because you would be paying more compared to what you would actually expense. Like in the month of August, you would be expensing rent of 3,500, but you would be paying 7,000 to cover both August and September. So the cash outflow would be $7,000 compared to the expense that we will be showing as part of our profit calculations, which would have been 3,500. So as you can see, there's a difference or as well. So other examples we can think of are whatever payments you make to your accounts payable. It could be greater than their cost of goods sold. And why? Because accounts payable refers to the credit suppliers. We could owe our credit suppliers on purchases that we have made in the past, in the previous period, and we have decided to pay them in the next period. So this is another reason why there could be a difference between the net profit and the cash flow. You could also think about GST settlement, because let's just say like we haven't paid the GST in August, for example. In that case, what would happen? That would result in a higher net cash flow from operating activities. But then GST doesn't really have any effect on profit. But if you were to pay the GST instead, it would have reduced your net cash flow from operating activities as well. So again, another example. Then what else can we think of? Let's think of disposal. If we have disposed a non-current asset and we have made a profit on the disposal, that profit will be included as part of the other income or other revenue when we prepare the income statement, and that is going to increase the net profit. But the profit on disposal is a non-cash income. There's really no exact cash in terms of the profit that we are including in the income statement. Sorry, in the cash flow statement. In the cash flow statement, we're only going to be including the entire money that we're receiving, and that will be entirely going to the investing activities section, which is not relevant in this case, but just for your understanding. So the profit on disposal being a non-cash item wouldn't be part of the operating activities section, and that could also result in a lower net cash flow from operating activities compared to the higher net profit that we would calculate based on the profit on disposal included as part of other revenue or other income. So this is another example as well. So as you can see, we have many examples, and even if we were to use the discount revenue from the month of September, although it's not relevant because we're talking about August, it could be relevant in the sense that the question says the discount is always taken. So let's just assume that. So in the month of August, if we had received discount income, discount revenue for making prompt payments or early payments, now that income, that revenue would increase the net profit. But then again, because we are paying less, that really doesn't have any impact, because the net cash flow from operating activities will only consider the amount that we have actually paid our accounts payable. So as you can see, we have many differences that we could look into, and this is how you need to justify your response if you want to get full marks. You can think of examples relevant to the scenario that we're working with, and you could also include other examples as well. Doesn't really matter as long as they make sense, and then as long as you can justify them. All right, so that is all for today's lesson. I believe you found a lot of value in this content. Do not forget to drop a like and subscribe to this channel, and I'll see you in the next video.